Welcome to the Accounting Technology Lab, brought to you by CPA Practice Advisor, with your hosts, Randy Johnston and Brian Tankersley. Hi, everybody. It's Brian, working hard at the lab today, but I thought I would let you know that I do have a quick announcement. We have a giveaway. We're going to be giving away one Ricoh ScanSnap IX 2500 Receipt Edition. We're going to make the drawing right after April 30th. No purchase required. Suggested retail value $599. This is has one-touch simplicity, and our friends at Ricoh graciously provided it to us. With automatic invoice OCR, detachable receipt guide for small and curl documents, and lightning fast 45-page a minute duplex scanning. It transforms paperwork into clean, searchable digital data in seconds. If you want to register, it's cpate.ch/scansnap. The rules are at cpate.ch/rules, and the privacy policy is at cpate.ch/scanner-privacy. And for those of you attending the video version of this, I've actually put on the screen now a QR code that you can capture and use to register for the scanner giveaway. Again, we're giving one away. We're going to give it away again right after April 30th, and again, you must be an accounting professional to win. All the rules again are at cpate.ch/rules. So anyway, with that, thanks for joining us, and here we are back in the lab.
Welcome to the Accounting Technology Lab. I'm Randy Johnston with my co-host Brian Tankersley, and are we super pleased to have a special guest with us today, Joe Woodard, who's well known for his Scaling New Heights event, plus just his broad expertise in small business accounting, client accounting services advisory. And we want to talk about the real deal, the real state of accounting technology here in 2026. And boy, is it moving fast. So, Joe, welcome. What would you like our listeners to know about your background?
Randy, Brian, it's great to be here. Thanks for inviting me on board. The best thing your listeners can know to kind of frame this conversation is that we have the nation's largest accounting technology expo. And therefore, I'm staying very close to the chessboard with all these technologies.
Yeah, so that is super. Well, as you know, Brian and I have followed this accounting technology and all of its add-ons for some time, and we're watching the expansion, if you will, of features, the new capabilities of the platforms. In prior accounting technology labs, we've talked about agents and MCPs and vibe coding, lots of technical stuff, but also some of the extraction tools. Unfortunately, one that's kind of gone at this point, BotKeeper. You know, I thought Enrico was doing a nice job with that, but there's some risk to our listeners. So what I'd like to do is maybe have a bit of a discussion with you about what you see as the current state of the general ledgers and the surrounding tools. So
All
what do you
right.
think?
Yeah, I love that. So let's start with general ledgers. We'll start with the platform and work our way out from there. Does that work?
Yep, as a matter of fact, it's kind of the way I think about the world, as odd as it is, because what I'd really love is if everything was in the platform. But, you know, historically with Intuit and Zero and others, they just didn't have all the capabilities. So we wound up with this whole third party ecosystem involved. And unfortunately, so many of our listeners had to select a tool to work with. Let's say it was QuickBooks Online, or whether it was Zero or QuickBooks Desktop, whatever it was historically, and then patch all the missing parts. And in fact, in another accounting technology lab session, we'll talk about the additive construction software, which I'm sure you're familiar with. And, you know, I just look at how many of these GLs have missed the mark on key things like inventory and costing. So many of them don't have that.
Yeah, you're absolutely right. And I'm actually going to qualify miss the mark because they actually hit their mark. So what I'm seeing now is a pendulum swing. Back in the desktop world, Peachtree, QuickBooks Desktop, they really became what I called SMB RPs, ERPs for the SMB. And they were grossly underpriced for their capabilities, but they were fighting on feature set and trying to win on feature set. QuickBooks Desktop was trying to hold people from natural growth cycles that would pull them upward. And upward back in the day was to sort of be a mass 90, which became Sage 100. So and some of the Great Plains or whatever. So they were fighting against that upward mobility, desktop war to desktop war, and they just kept building and building out these feature sets, competing on feature. And now I'm not seeing the cloud play being a compete on feature. Everybody kept waiting for QBO to become QuickBooks Desktop, and Intuit kept saying from the beginning, we're platform. They didn't use the word plumbing, but think of it like plumbing, right? And then the house is built around that. Now that's really smart for Intuit because they don't have to put as much energy in a product development queue. It can all be into API and ecosystem building. And it's really smart as a strategic play for the small business because they get best of breed, but it only works if the platform is extremely tight and open. And this is the tension that we're starting to see already in cloud. And then I'll get to how it's going to exacerbate in AI. But where the GL platforms are now swinging back toward a monolithic approach, not on industry specific, but on new monetization models, payments, payroll. They want to own that now. And so they're starting to not close the API calls, though they're doing a few doors and a few gates just to give themselves competitive advantage, mostly on reporting and outputs and more complex transaction handling. But they're definitely pulling back on how they're empowering that ecosystem.
Yeah.
And so as this pendulum now swings from monolith, QuickBooks Desktop Enterprise Solution, Peachtree, right, over to open is open, we're plumbing, and now somewhere back toward the center where we're going to swing back to monolith, but only horizontally. You want construction, you still go add on. You want inventory, you still go add on. But everything else we like to control in the middle.
Yeah.
Now, they
And
had no
that makes
choice though, because they had to find new ways to monetize.
Yeah, and that makes great sense. In fact, we have a separate episode on the AICPA Accelerator program, and we had this exact discussion during the Accelerator event related to these platforms. And it went a little further, Joe, and you're quite aware of this too, kind of the collapse of SaaS and the things that are going on in
That's
that
Oculus,
area,
yes.
which is also topical. And of course, Brian's my digital plumbing guy. I think he's the guy that first talked about plumbing between these platforms. But it turns out this feature war has long been over in my world. And we've got this whole radical shift like that we'll also talk about in our time together with AI. But this concept of we're only going to be doing so much. I got to see my granddaughter in New York this week. And I think one of my favorite phrases of her is, hands on the face, Grandpa, that not be the plan. And, it not be the plan is what Intuit said all the way along about building out these extra features. It,
Mm-hmm.
it was not the plan. I understand not being the plan. So, when we look at options, because for those of you who are practitioners trying to run a client accounting services practice, or those of you who come from the VAR model where you were trying to solve problems, it's made it difficult to move. And we're going to go one more step to get some of the completeness. You may have to have gone up market to some of the platforms. And in the SaaS world, we had the bigs playing there, Sage Intacct and NetSuite and Acumatica and Dynamics, all the players like we do from that vantage point, Joe. But the problem was with the big boys, they really got, I guess I'll say, heavily monetized. They got a little greedy on their fees and they were complex to implement. There was just lots of issues around that. So the problem has always been what our associate Mac McClellan calls the shim market, the space between mid-market and entry where a lot of US business operates.
Yes.
And historically, we did that with third-party tools.
Yes, we stretched QuickBooks with third-party tools. And now this is a great segue into the AI because sitting between the traditional SMBs, the Zeros and the Intuits of this world, and the NetSuites and Intacts of this world, especially between the NetSuite and those, is an emerging category that's more reachable. They're the three key players that have raised about 300 million, about 100 million each, all within the last, say, 180 days. One of them as recently as the last 90 days. Are dual entry, Rillet, and Campfire. Now, this is a very interesting group to watch because, in
Yes.
one sense, they reflect the we are platform, we are plumbing play. You go to, you can't, they'll handle a bill, but they're the first to tell you, no, use our bill integration, use our Brex integration, use our ramp integration or whatever they integrate with. And they're hungry. They were hungry for AP partners right out of the gate, spend partners right out of the gate, rather than build it. They will tell you, and I've met with their CEOs recently, and this was not told in confidence. They broadcast this strategy. We are not a construction platform and don't want to be. We are not a warehouse management platform, don't want to be. So now they're really hungry for those kind of integrations. And because they're trendy, people are listening to them, even though their install base is in the hundreds, not the thousands. So, but this is particularly interesting. They are priced at about 25% the price of NetSuite. If you count the initial 1 year cost and implementation, it's about 25% the investment to launch. And the bragging point, now I don't know, I've talked to a few people that have implemented it and they backed it up. But the bragging point is that the adoption curve is around 3 months as compared to NetSuite, which can be up to a year. Now, if they can hold this and back up these claims with consistency and not jack up their price as they get to a tipping point, then they're standing in a position to disrupt. And then I'll pause after saying this last sentence. And they're the opposite of monolith. They're swinging that whole pendulum in the mid market back to plumbing, back to platform, and it may swing back again. You know, those things do that as they're looking for new revenue models. But right now, it's going back platform.
Yeah, and it is fascinating to watch. And again, you and Brian and I all try to help every firm that we can be better and understand what the choices are here. But when you look at other monolith platforms out there that are a little lower end, the Odoo's and the Zohos and all of those types of players, it becomes really a rather confusing market. And of course, there's even more GL based AI products like Digits, which you're quite familiar with, or Puzzle, again, you're familiar with. And I'm just watching and saying, okay, so which shot call should we take? Who's going to be the survivor? But you know, when you consider the integrations that many of these platforms did with the bills and the ramps and, you know, the ADPs and the paychecks and so forth, and all of a sudden those market shares are being, I'll say, lightly taken away, it makes for a very, well, as Brian likes to say, we live in interesting
We
times.
live in a strange new world, is the way I would phrase
But
it.
but it feels like we're back in 1985 when everybody's decided in engineering that they can fix accounting somehow.
Hmm.
Okay. And they'll make some progress. Okay. But at the end of the day, I think the accountants are still going to have to fix things, okay? Because this strategy, in my mind, has a fundamental flaw, is that the interfaces are not going to work perfectly 100% of the time, okay? And your average end user is going to struggle to fix it. I will
So
say,
there's a concept in artificial intelligence development. You may have used the phrase here on past episodes called human in the loop. You can't talk to
yeah,
an AI
yeah,
platform or someone developing AI into their platform for 5 minutes without them using that phrase, human in the loop, human in the loop.
it is like
And
adult
for the listeners
supervision
here
with
who've not
children.
heard it, it just means that the human in the loop completes what the AI can't do and reviews what the AI does do. And then I would add as a third piece of that, as they do those two things, they train the AI in doing it better and better cycle over cycle. So the human in the loop is, in a sense, the supervisor of the AI worker, okay,
Yeah.
and the completer of the process. Typical review work. Now, can I say that that role is going to stay relevant, Brian? I agree with you for a while. I believe the role is going to shrink faster than most people think it's going to shrink. Now, go away is a completely different animal. You know, and I think the complete is going to give way more and more to the review. The review is going to give more and more way as the consistency gets up and the confidence and trust gets up to smaller, smaller review cycles. So it's going to squeeze that role out. And we're not talking decades, we're talking years. So what I like to do with human in the loop is add a third piece. There's complete, there's review, there's transcend. And so the human in the loop is more than the servant of AI. They are served by the AI and they are providing judgment, they are providing wisdom, they are providing mentorship, they are emoting what is happening in the outcomes of the financials. They are looking at they're putting all of that and contextualizing that into a relationship with the client. And those are the things that the bots cannot do. And even if they could mimic it, they ought not do.
Yeah, and
Yeah.
just thinking about the way you're talking about that, an additional characteristic I think we see frequently is transparency, which enables a lot of the human in the loop, Joe. And again, an old phrase on this, belt and suspenders. The human in the loop is fundamentally holding things together, if you will. Further, if Jeff Siebert from Digits is right with his claim that by the end of 2026, most month-end closes will be automated, I think that's a little quick in the estimate, but it could happen that quickly. If you consider that many of these products are going to be doing month-end closes, and then you go out to the reporting, and you actually got to exactly where I've been mulling. I say more than mulling. I've been waking up in the middle of the night worried about this stuff. So that tells you how much it's eating at my soul, is accountants remaining relational, because so many of these systems are trying to turn accountants into transactional animals. And you don't have a relationship on transactions. You have a
Randy, you
relationship
said
by talking to
maintain.
people.
Maintain. It's got to be bolder than that because, yes, some would maintain. I think many need to create. And what I'm hoping here is that it will put a positive pressure on the accountants to move into a relationship model because they will have no choice. The ground's going to shrink underneath their feet. They can't hide in the transactional anymore.
Well, but
Yeah.
historically, most of the really good sales accountants that I've known were really business social workers. Okay. I mean, they weren't
Great
helping people,
phrase.
they weren't helping people get homes or helping people, beat their drug problem or anything like that. But they were definitely solving serious business problems. And they did things like they held the hand of the spouse of the dead business owner and the children and said, we're going to make this and it's going to be okay because I've been down here before and I know the way out.
Mm.
Okay. And,
They're
it's,
guides
I,
and agents of comfort in crises, sometimes nuclear crises. Yes.
Yeah, and the AI will never ever be able to do that because
No.
you will never be able to sleep and trust that ChatGPT is got your back.
And even if it's accurate, and
Hmm.
even if you could trust it to be accurate, it is not ultimately what you need or want. So when I was going through one of the darkest financial times of my life, I leaned on my CPA, who was also my business mentor, who was also my friend. And he met me on a Saturday morning at Panera Bread, and I bled on him. And I get emotional, see, which I cannot do with ChatGPT
Yeah,
because he reached across the table and he just lightly put his hand on my hand and he said, "We will get you through this." A bot
the,
will
the
never be able to do that.
the best CPAs and the best bookkeepers love their clients, and they're like parents. They want them to be the best they can be. And it's in my mind, it's sad that all these engineers think that the job of counting is going away. Sure, the staff works. Some of the entry level staff work for people that know the process in the accounting software to enter the data. Yeah, that work's gone. Okay, but this mentoring and just like a coach can motivate people to get the most out of them and to get them to get it to achieve their potential, that is the role of the CPA in the
Mhm.
business.
Yes.
And the other thing that we're seeing, and we've used these words before, and I don't like to repeat things from the past, but too many fake advisory claims are being made, as I would see them. It's truly consulting, it's not real advisory work. And to me, that is where the future is at. But
Mhm.
so many people have tools to sell to turn you into an advisor as opposed to teaching you how to be an advisor and what it means. That part's also driving me kind of crazy. Now, I know, Joe, you had another important vision in this strategy on where this is going with AI, because Brian and I have been talking about in prior episodes, you know, agents and how they work, and MCPs and how they can be used in the firms and so forth. So what do you see in the future here on accounting with AI?
So just where do I see the entire industry going, kind of
Yes,
taking
sir.
it up to 40,000 feet? I see us being smaller in number than we are today. I see that shrinking number impacting outsourced, offshored labor first. And because that's typically where we went when we needed inexpensive outcomes that we had the inability through budgets or through staffing shortages to resource onshore. So I see. So if we watch what's happening in India and the Philippines, and we treat that as a leading indicator for what's coming to the U.S., it'd be really good to look at that as a predictive metric. Then it'll hit our shores, and then the industry will right size around the technology. Now, part of what's helpful here, so it's not apocalyptic, it's actually a new era, like a dawn of a new era. We have about 10,000 boomers retiring per day in the country. That's the pace right now. And that won't stay at that pace, but that's how we're spiking right now. And boomers typically are the leaders of these accounting firms. So they're retiring off. We were going to lose all of that top end leadership while the junior partners and the successors were buried down in tax returns and bookkeeping work and couldn't breathe. So this is a much needed rescue by artificial intelligence. We're starting to see a little bit of pickup in accounting degrees coming out from the universities. They're mostly going into the top 20. So everything below that's not getting that pressure relief. So it is a long way from being a corrective motion. Yet the workload is increasing. More businesses are forming, especially in a post-COVID world where you don't have all the infrastructure and overhead and the optics of having to stand up offices and equipment. And those businesses are sometimes rising quickly. And so as workload is increasing, we have workforce decreasing, and we have artificial intelligence filling in the gap. So when I say that the profession will be smaller, I don't mean that to say that it's going to be a negative disruption. I think it's going to just be it's kind of a rescue. It will come in
Yeah.
and rescue our staffing crisis.
But
Well,
Now,
so
and then
but
I
the
want to speak
people
to what those who remain look like. But yes.
but the people that refuse to play in this new AI technology world are going to be voted off the island by pricing and by all kinds of things. You will
Yes,
not be able.
pricing to some degree, if you want to play at that level and go up against, the retail side, with the penetration pricing models, don't recommend. Some will try, they will fail. You can't keep up with it. Now, at the more neutral and skim pricing models, boutique models, Brian, I think that price is not going to be the biggest driver. I think the biggest driver is just going to be competitive advantage and effectiveness. The firms that have embraced it are going to be 10 times, 100 times more effective than those who haven't. I do think their margins will also be significantly better, giving them a more competitive advantage on capital resources for R&D and marketing and customer experience
So do you think we
innovation.
finally reached the time of this real-time reporting that we've been talking about since, collaborative accounting was talked about 15 years ago?
Yeah. Oh, I think it's upon us. Yes. I think it exists now because it exists with that human in the loop.
Yeah.
That final mile they have to do to get the package to the door, but it's only the final mile.
Yeah.
So it's actually viable to do that at scale across your client base. Also, it's taking the client friction out of the equation because what we used to depend on them for, we can now bypass them more and more, go straight from the source data, including even
Bank
contracts.
fees.
AI can scrape a contract and
Yeah.
automatically set up the milestone-based billing. So
Yeah.
the more we take, the more we're the human in the loop, but we take the client as a human in the loop out of the loop, more we can make it real time. So
Well, so just kind of listening to this, and Joe, you'll appreciate I've had an earworm from your comment earlier because I've got the dawn of the age of Aquarius playing, but I also
This
have
is the
your,
oh, that's
dawn
a
of
throwback to
the-
Hair. I loved that musical.
but I knew you'd love that, but you'll love the next one even more. but I also had the Lion King theme.
Mm.
So I've got these two soundtracks going in my mind. Well, I know we were trying to set up the second episode with Joe where we talk about products. So I wanted to kind of wrap it up here and say, look, if you've enjoyed what Joe's shared with you in this episode, we ask you to join us on the next episode where we dig into a lot of the new generation accounting products. So this is Randy, Brian, and Joe signing off with you, and we'll see you on our next Accounting Technology Lab.
Thank you for sharing your time with us. We'll be back next Saturday with a new episode of the Technology Lab from CPA Practice Advisor. Have a great week.